Alright, quick thought experiment. What if I'd put $100 into Apple back in 2002 and just left it alone? Don't forget to like, comment, and subscribe for more informative content. I'd appreciate it. Here's the simple numbers-only breakdown. Apple's had 3 big stock splits since 2002. 2 for 1 in 2005, 7 for 1 in 2014, 4 for 1 in 2020. Multiply those together and every share back then became 56 shares today. Now what did Apple cost in 2002? Adjusted for splits, it traded for well under $1, roughly 30 to 80 cents per share on a split-adjusted basis. If I bought $100 in late 2002 at about $0.50 adjusted, that's about 200 adjusted shares. No further math needed on share count if we're using adjusted prices. What matters is the ratio from then to now. Today Apple's around $180–200 on that adjusted basis. Take a 0.50 entry to 190 today, that's a 380x move. $100 becomes about $38,000. If you caught closer to 0.30, you're looking at roughly a 630x move. That same $100 would be around $63,000. If you were less precise, say $0.80, then it's about 240x, roughly $24,000 from that initial $100. So depending on when in 2002 you bought, a realistic ballpark lands around $20,000 to $60,000. That doesn't include dividends. Apple started paying dividends again in 2012. If you reinvested those along the way, the total would be higher. Depends on timing and reinvestment price. Annualized, that's roughly a 30–40% compounded return over 23 years. That's not normal. That's a generational outlier. 2 quick sanity checks. The split math lines up. 2 7 sec 4 equals 56. The adjusted price path from under $1 to roughly $190 explains the 200x 600x range. Now, a few don't get burned takeaways. Survivorship bias, I'm showing a winner. Plenty of early 2000s tech never recovered. Holding risk, there were brutal drawdowns. Apple has dropped 30 to 60% multiple times. Taxes and fees, real returns shrink after taxes, commissions, and spreads. Timing luck, buying in 2002 is very different from buying in 2007, 2012, or 2021. So, what's the lesson I'm actually taking from this? If I believe in a company with durable growth, time in the market matters more than timing the market. Owning broad, low-cost indexes captures the next Apple without guessing which company it'll be. If I pick single stocks, I size them so I can hold through pain, because the biggest winners demand patience. If you found this video informative, like and share.